All right. I want to thank everybody and welcome you all to today's C2C Chamber to Community event, the Entrepreneurial Equation. We have Stephanie Hogan, who is a financial advisor with Edward Jones, coming to speak on this. And Stephanie is a Rogers entrepreneur, and as I mentioned, has been working with Edward Jones for the past 2.5 years, building her own setup. And you are located just east of town in Prairie Creek. Is that correct?
That is correct.
All right. Sorry, I didn't mean to catch you while you were taking your pre-speech sip there. So, but we do want to thank everybody for coming out. As I said, if you got my email this morning, it's not just school kids that don't get to enjoy snow days anymore. With everything being virtual, we are able to host this despite the blistery, wintry weather that's going on outside. So we are recording this session, so everyone has access to be able to use the chat function. If you have a question, you can send it via chat, or I'm assuming, Stephanie, you're going to have a time for Q&A at the end.
Yep.
All right. So, and then you'll have that opportunity as well. So just a reminder of that. So we will be putting this up later on our chamber social media pages as well. If you have someone that you knew was looking to attend and wasn't able to and could take advantage of this information. So without further ado, I am going to turn it over to our speaker today, Ms. Stephanie Hogan.
Yes, thank you, Steve, and thank you everybody for joining again on this snow day. Hopefully everybody's safe and warm in your houses and staying off the skating rinks that have become Northwest Arkansas. As Steve said, I am with Edward Jones. I'm a financial advisor. I've been with Edward Jones 3 years now. Prior to that, I worked with the Walmart home office, corporate office here in town. And I've lived in this community going on 10 years, but I've been visiting Rogers my whole life. My grandma lived in Rogers, so I've seen, all the changes, economic development, all the fun progress that's been happening in this area. I became a financial advisor because I have a passion for investing and helping people meet their financial goals. This is also a big reason why I present educational opportunities like that to help people like you and business owners like you become educated investors. Today's presentation is designed to help you as a business owner understand the tools available to help you build, grow, and preserve your business while allowing you to focus on what you do best. Before we get started, just in the spirit of, we're all business owners and representing our own companies. In a normal world, we'd be able to trade business cards, chat, actually shake hands. But I did just want to go around the room and give everybody the opportunity just to introduce yourself and tell us a little about your business briefly before I dive in. So, back to my screen. If we could just go around, if you're comfortable, and just tell us your name, the business that you represent, how long have you been in business, if you don't mind sharing the number of employees that you have, and one money question or reason that you joined us today. Steve, you want to go ahead and do roll call?
Yeah, I'll go. I'm happy to go first. I am Steve Cox. I'm Senior Vice President of Economic Development for the Rogers Lowell Area Chamber of Commerce. We have been around for 99 years. We are celebrating our 100-year anniversary next year, so we're excited about that. And we have, I think, 25 people on staff currently. And really, I'm just here to learn. As part of my role is assisting with entrepreneurship in Northwest Arkansas. So I just like to stay well-versed in all the options that are there as small businesses and entrepreneurs come to the chamber seeking assistance. So don't really have a question. That's more why I'm here. What can I learn, I guess, is my question.
I'll just go down my line. I see David Harris next.
Hey, Stephanie, David Harris. I'm sitting in on this one, just obviously like you, part of this Rogers Small Business Council. Just wanted to check out how these events are going.
Yeah, thanks for joining us and supporting. Sheila Posey, good to see you.
Hello, good morning, everyone. So my name is Sheila Posey. I am in Fayetteville. My business is On Point Solutions, LLC. I've been in business, June will be 5 years. I have 18 employees across 8 states. And so 2 of the key services we provide is interpreting and translation support for companies, as well as helping systems implement technology solutions. And so if you've heard of change management and helping employees transition through change, that's kind of the wheelhouse and kind of the service we offer. My money question, as it relates to business, kind of probably one of my goals is having a kind of a, I call it a set aside, setback account, really working to cover that, set that aside for its salaries for the year and making sure I'm kind of planning ahead and can, stay ahead of the changes with everything changes so much. So.
Awesome. Well, congratulations on that 5-year milestone. That's huge. And
Yeah, thank
for
you.
joining us. Karen Wegman.
Hi there. This is Karen Wagaman. I, like Steve, work for the Rogers Lowell Area Chamber of Commerce. I do economic development and my focus is downtown Rogers. But so I'm always trying to educate myself so I can better coach small businesses that I work with. But I also have a couple of side gigs and we own a couple of Airbnbs. I've got a little booth at a flea market and I have an art business. When I retire, I'll probably pursue those even more. One of my questions, I guess, would be, what's the importance of life insurance? I've got a term life insurance policy, but now that my daughter's 23 years old, I wonder how important is it to have life insurance?
Awesome. Well, thanks for these questions and thanks for joining us. I have AJ next on the list.
Sorry, I need to change that. I think you're the one that set that up, by the way. And now every time people are like, who's AJ? And I'm like, taking it. I'm Anita Johnson. I do a couple of things myself. I'm a real estate agent with Coldwell Banker, and I'm also a small business owner, Bumbles and Boots Custom Creations. I do custom gifts and gift baskets. I've been a realtor for 6 years. I have been a small business owner for a little over 4. I have 0 employees, just me running the gig. And as far as the money question goes, I feel like I ask Stephanie money questions a lot. But I would say stocks and how to go about doing things like that. Like, because I have some stock and some things that I just kind of bought, just how to manage that stuff, especially with the market the way it is and it hitting like bigger, like this stock has gone up and I'm like, now what do I do? Do I keep it there or do I like try to use that for other investment things?
That's another great question. Sorry, scrolling down my list. Shelly Summers.
Shelly said her mic isn't working.
Okay. How about Miss Mary with Bookkeeper Plus?
Good morning, Miss Stephanie. Mary Shope with Bookkeeper Plus. We've been in business for 3 years now. It's my partner and myself, and we have a couple of part-time folks that work for us. Money question, I always like to learn from you in order to help our clients know that there are other things to do with their money besides buy equipment. There's ways to invest in their future.
You just teased my whole presentation. Thanks for that intro. And Aura.
Good morning, guys. I'm so sorry. Trying to get this microphone to work. My name is Aura with Dance With Me Studio by Aura in downtown Rogers. And I have been operating in NWA for the past 14 years now with this new name, actually new studio that I own now. It has been 2.5 years. So it's been a wonderful journey. I am I'm a sole member, and I'm the one that basically runs the entire show in that business. Money questions, I really, I guess is basically just to kind of find a balance between how much is enough to invest, or if there is enough a limit or a okay amount of money to invest in any publicity. Basically, I guess that would be the biggest thing for me, since I believe I have done a good job investing my money right now, at least with with the actual location and operating expenses, putting on the side basically publicity. I guess I'm still trying to find a balance in that, and not quite sure exactly how to figure that out.
Awesome. Well, thank you all for introducing yourselves, sharing a little about your businesses. It's great to hear kind of where everybody's at, a little about where you're going, and some of the questions that you do have. If I don't address any of the specific questions in this presentation, I'm happy to follow up with you just one-on-one and talk more deeply through your specific questions and ideas. But also, since we are business owners, feel free to put your contact information in the chat box for each other, just to connect with each other and connect with other business owners in the area. Without much further ado, we just heard a lot of different types of businesses represented. And so we all have day-to-day activities that probably differ, but we actually probably have many things in common. And, whether you are the only person running the company or you have 18 employees to pay and keep track of, it's likely a lot of us are strapped for time. We are probably all dealing with our share of financial pressures. And if we do have employees, those come with their own set of challenges. There are tax issues associated with owning a business. So, top of mind tax time right around the corner are all the taxes and what money is potentially going to go out of our business to the government. In addition, you've likely faced challenges that are unique to your specific business or industry. What is your vision for your business? Sometimes that vision can be clouded, and because we're wearing many hats, we get bogged down in the day-to-day and forget to kind of take a step back and look down the road. We're playing HR person, manager, marketer, salesperson, general go-to person for the problem solving. So you need to find an equation that gives you the best mix of operational, business, and personal financial excellence. So today we're calling that the entrepreneurial equation. An important step in developing your own equation is to engage a team of professionals to help you deal with a wide range of daily business needs. This team, put these people in your corner. When we talk about all the many hats that you wear, some of those hats you just want to pass off, again, so you can focus on doing what you do best. So your accountant or your bookkeeper to deal with taxes, cash flow, payroll, and expenditures. An attorney for your business structure, succession, and estate planning. And your financial advisor to keep an eye on your business and personal goals and investing needs. And, address those questions and some of those what ifs and how to look forward that we just heard. And to help you make sure that you have the appropriate amount of insurance to help protect those goals. Your financial advisor needs to be familiar with your business and your personal and financial history so they can help coordinate the efforts of the full team. So working with that accountant and that attorney. Think of them as the quarterback on the football team to help orchestrate decisions that are right not only for your personal situation, so you, your life, your family, but also for your business and your business's goals, future, and growth in the near and long terms. So here are some key steps towards achieving your business and personal financial goals. This is a great kind of process, a repeatable process for you to just adopt and apply to your own goal planning. And this is a good guide for those conversations among that team of professionals. So 5 simple steps, and this isn't a one and done. This is something that you can revisit. So, set little achievable goals and constantly check in with, did I achieve that goal? What did I do to get here? And where do I want to go next? How do I get on to the next thing? So to have a clear outlook on your future, first evaluate where you're at today. Only then can you begin to set clear and measurable goals of where you want to get. Once your goals are determined, it's time to evaluate if they're realistic based on the time horizon. So how long do you have to achieve your goal? How long are you giving yourself for that to become a reality? And the investments you're comfortable with. So what does that goal cost? How do I put my money to work? And how do I save to make that goal a reality? So that's mapping out how do we get there. And then you can work with someone like a financial advisor to uncover the tools and strategies that can help you get there. The more you know about the strategy available to you, the more you'll understand where your money is going and what it is doing for you. So you're working so hard for your money. Is your money working for you and those goals? Are there other tools and strategies that you could take advantage of to help give you an edge on achieving that or going down that path? And then you'll stay on track again. This isn't a one and done, by regularly checking in, evaluating where you are. And I always tell people to celebrate too. I mean, look at this past year and the challenges that you have faced personally in your own life, in your business, with this crazy world that we're operating in right now. So always, again, in setting those little achievable goals, celebrate what you have made a reality, how far you've come, what you've accomplished, and then always look up towards the next thing to plan out and then hopefully celebrate soon. So this is only one strategy to help you reach your long-term financial goals. Your strategies can be as individual as you and your business is. Think of these 5 steps as a great way to start addressing the issues and concerns you have now, or the concerns and issues you will have in the future as business owners, so you'll be prepared no matter what happens. Another way I like to break it down is when we talk about that time horizon, how long do I have to achieve those goals? This is a good tool or way to write down those things you want to accomplish now and down the road. So think of all the things you want to spend money on in your own life, in your business's expansion, expanding to another state, purchasing a new facility, hiring on employees, and the price tags that come with those things. How long do we have to accomplish those price tags? And again, back to the tools and strategies, there's things that can help you with each of these buckets and each of these time periods to kind of be thinking in terms of multiple goals at once. So regardless of the type of business you own, you likely have goals in 3 key areas. You want to build and develop your business. You want to create value outside the business and preserve your business so you can pass its value onto your successors, your heirs, or subsequent owner. When you're building your business, some simple banking services to help with cash flow management may be beneficial, especially when they pertain to time management. For example, do you need help managing payroll? You may also consider business credit cards for key employees that are a great way to track spending automatically. If you need additional liquidity or immediate cash flow, you might think about securing a traditional loan or even a margin loan where the investments in your brokerage account are used to secure your credit line. Automatic banking services are available that might be a great help in opening more time in your busy schedule, again, so you can do what you do best, run your business. To grow, you have to attract and retain employees. Again, remove some of those hats, give those hats to some other people to take some things off of your plate and help you maintain focus. This means offering the right benefits package and considering a quality retirement plan. These are the types of benefits potential employees are looking for. This is how you attract the best quality talent and kind of get an edge over your competitors. Is there an integral person in your business who can make or break you? For example, a chef at a restaurant, can they prepare the meals if that chef doesn't show up for work? A project manager that helps you manage multiple things and hit deadlines and track all the pieces. A sales manager, a person whose absence could completely change your business. As you build a solid business, you should ask yourself these types of questions. It's just good business to protect yourself against Murphy's Law. Does anybody suffer from Murphy's Law? How do you create value outside your business? So your business is worth something. Maybe you're thinking of selling it one day, but what value do you have outside of that business entity? How many of you consider your business to be your retirement plan? In addition to running a successful business, you also need to provide for yourself and your family over the long term. So back to those money buckets, we're working for a purpose today. We're working to provide a paycheck. We're working to provide for our families, to allow a certain lifestyle today. How far are you thinking down the road in terms of that future paycheck and your future self? And not only taking care of your paycheck and your family today, but think, how hard do you want to work? Is there a point in time where you want to take a little step back from the business? Maybe not work so hard, go on autopilot. And when you have all that time freed up, what do you want to do with all your free time? How do you define living your best life? And how are you generating that future paycheck for that best life? As I mentioned earlier, offering a retirement plan can help you build your business by helping to attract and retain quality employees, but it can also help create value outside your business. Look at it this way. In addition to your role as a business owner, you are also an investor. It just makes good sense to diversify your assets and retirement income so you don't have to put your entire retirement nest egg in your business, putting your eggs in different baskets. Saving outside the business means you control your own retirement rather than depending on the sale of the business to fund your retirement needs. There's no crystal ball that can tell you what it might be worth when you're ready to retire. One scenario could be worth only the equipment, building, and inventory, which may not be enough to support living your best life, that lifestyle in retirement. And frequently when a business is sold, the owner must finance part of the sale. Last, the right retirement plan may enable you to benefit from several tax incentives, including a tax credit for a business owner setting up a new plan, tax deductions for making contributions to the plan, pre-tax salary deferrals, tax deferred growth on the balance inside the plan, and potential tax-free retirement income if Roth IRA deferrals are made. This is another place where that team works together. So your financial advisor can work with your CPA, who can help you decide which plan is best for you, your business, your goals from a tax perspective. So again, tax time right around the corner. These are great conversations to have when you sit down to file those taxes. Are there additional potential credits and deductions that your business may benefit from in the future that can put more money towards your goals and in your pocket than in the government's? When you start thinking about the retirement strategy that's right for you, it's good to start by considering these 4 questions. First, what is your retirement goal? A properly structured plan considers how much you can contribute for yourself. Second, if you have employees, they have retirement goals too. Do you plan to contribute on their behalf? Third, are you willing to give more to your employees if that means that you can give more to yourself or maximize your own contribution? And finally, some plans allow you to contribute more for yourself than you are required to contribute for your employees, but those plans might have higher costs. However, the benefits will allow you to save more to help you meet your goals. You may save more in taxes too. And it's important to understand the costs associated with your plan. And again, your CPA and your advisor can sit down and actually map out what that plan looks like in terms of real dollar values, benefits, and costs. So you can be incorporating that into your vision and the growth of your business from a planning perspective, using real dollars. With those in mind, let's look at our options. So these 3 options are for the businesses with no employees. And I'm just going to skim through these really quickly. But again, if just kind of write down the types of plans as questions or conversation for your tax preparer. And then they can dive into the specifics of all these plans as it relates to your business. But 3 plans for businesses with no employees are a simplified employee pension, if you've ever heard of a SEP IRA, an owner-only 401k, or a defined benefit plan. These differ primarily by how much you can contribute for yourself, the business owner. You might consider a SEP if you are looking for an easy, inexpensive plan with flexible employer contributions. Whether you have no employees, have some employees, or plan to hire in the future, a SEP may still be suitable. There's no limit to the number of employees you can have, but the SEP is primarily appropriate for business owners with no employees or fewer than 10. If you have employees, you must be willing to contribute on behalf of all employees eligible to participate in the plan at approximately the same level of contribution. Another option is an owner-only 401k. This allows higher contribution limits than the SEP, including the ability to catch up on your contributions if you're age 50 or older. An owner-only 401k is a simplified 401k plan for a business with no employees other than the owner and his or her spouse. Last, if you would like to contribute more for your retirement plan than allowed with a SEP or an owner-only 401k, a defined benefit plan may be an option. These work best if you're older than 45, earn more than $100,000 annually, and can contribute for at least 3 years. These allow you the highest contribution levels, often more than $100,000 a year. If you have employees, these are your plans or your plan options. Plans that use salary deferrals are the most popular for businesses with employees. With a salary deferral plan, the employee contributes on his or her own behalf. So the employees are allowed to, or are now able to save for their own futures. These plans also offer the opportunity for you to make business contributions on behalf of your employees. And the three main plans you should consider are the simple IRA, a 401k, which also includes a safe harbor 401k, and custom plans. So the simple IRA, a savings incentive match plan for employees, is a good option because it allows business owners and key employees to defer contributions, even if other employees choose not to contribute to the plan. The business must either make a small contribution to employees or commit to a small matching contribution to receive this benefit. A traditional 401k allows employees to contribute to a plan on a pre-tax basis, which reduces their taxable income. And the plan may also allow for Roth deferrals. So it doesn't reduce their taxable income today. They don't get a tax credit today, but it has the potential for tax-free growth and bypassing those taxes later on. Keep in mind that with a traditional 401k, the amount owners and highly compensated employees can contribute is limited by how much all their employees contribute. Low deferrals by employees mean low deferrals for business owners and highly compensated employees. So if part of the purpose of you, the business owner, putting this plan into place is you want to save the most for yourself, then you're also going to have to keep in mind that you want to encourage participation by your employees and a culture and education where employees are saving for their futures to allow you to accomplish your own goals. A safe harbor 401k works much the same way as the traditional, but there's one big difference. Owners and highly compensated employees can contribute the maximum salary deferral no matter how much other employees defer. So unlike the last one where you kind of have to encourage that culture and encourage them to participate, in the safe harbor, you don't depend on them. You can contribute the max for yourself. However, contributions to employees are required. So you have to make that contribution. You have to make that match. In this way, it's like the simple IRA. However, the safe harbor allows large contributions. Custom plans are specifically designed plans or combinations of plans working together, like a 401k, profit sharing, and or defined benefit plan that may allow maximum contributions for owners and select employees, often without significant increases in the contributions required for employees. The benefits of these plans to owners and to key employees, if desired, can far outweigh any extra administration or contribution costs. Proper plan design is really driven by how much you want to contribute for yourself and how much you wish to contribute for your employees. So there are options. There is flexibility. Some require a match, some don't require a match. There's a lot of flexibility that business owners don't actually realize, which is a great place to dive in with your CPA and your financial professional on your specific tax situation, your goals, your family, your future, your tax situation, and which plan is going to help accomplish those things for you, and what flexibility is out there, what concerns you do have, because there's just these things aren't taught, and there's just a lot of information that's not widely shared and spread. So I would just suggest you discuss all of these options. Just hopefully you made note of the type of plan, and these are good questions to ask in your next tax conversation. So that was a lot of information, doing a check-in. Does anybody have any questions so far? I haven't been watching the chat box.
There were a couple that came through in the chat, yes.
Okay.
Looks like the first is Sheila Posey had the question. I have 3 full-time employees, 5 part-time, and 10 seasonal that work based on a project basis. What would be your advice / guidance when thinking about offering an employee retirement plan? I don't know if that was, if what you just went over answered her question or not.
So definitely those are the 3 plans that involve the employees. And again, it kind of goes back to that flexibility in that plan design. It might fall into one of those higher cost plans because you want to get very specific based on the full-time and seasonal kind of structure and how you want to use this plan to your business's benefit. But again, sitting down with your tax professional and that financial professional and actually mapping it out, they can put together a specific proposal that will show you what that plan costs and exactly what kind of flexibilities you can build in to address that unique employee situation. So unfortunately, there's not an easy or quick answer to a lot of these stuff because it really does depend on you, your business, your outlook, your growth. But definitely start with writing down these 3 simple safe harbor or traditional 401k and custom plans for kind of conversation starter. And as far as new tax advantages due to the pandemic, there are new credits and deductions related to these employer plans tied to the Secure Act that was actually passed right before the pandemic that we could do a whole presentation on. But I'd be happy to dive into the Secure Act a little more and how some of these plans have become more affordable and more accessible to employers just because the government did realize that not enough people are saving for their retirement and there's not enough tools out there available for employees. We're putting way too much stress on the tax system. So there are some new credits for sure. It's a good question.
And not to take away from what you're saying, Stephanie, but Sheila, if you did get a PPP loan, there was some confusion as to being able to still write off business expenses for tax purposes for money that you use the PPP loan for. That was corrected in the second round. So those deductions, any deductions that you had before, even if you use PPP to help with that, those will still be allowed when you file your 2020 taxes.
Thanks, Steve. Yeah, again, not always an easy answer. Always back to just sit down with that team of, the legal, tax, and financial professional and make sure that you're maximizing all the tools and strategies out there because there's so many to sift through. So let's shift gears a bit and talk about how you can help protect the business you've worked so hard to build and create value at the same time. One of the key protection strategies for your business and personal lives is insurance. If the unexpected were to happen, insurance can help protect your business and personal interests, such as taking care of outstanding obligations, providing for a child's education, or paying off an outstanding mortgage or your final expenses. There are also insurance plans designed to help you save more than the limit allows for retirement, like a life insurance retirement plan, which I'll explain a little more in a few moments. I want to talk about the importance of protecting your business with a couple stories. This one, sorry, these are kind of pre-created stories. So not a lot of weddings happening in COVID. So probably a pre-COVID related scenario, but just, relate to Sue and think about her situation and how it could relate kind of to your own business. So Sue owns a very successful flower shop called Forever in Bloom and works with a wide variety of clients and provides a number of floral services, but over the years, her niche has become weddings. The company is on target to do around 300 weddings this year, which is roughly 6 per weekend. One of the biggest reasons so many people choose Forever in Bloom to handle their special events is that for 8 years, Jenny has been Sue's chief floral designer. With the help of a dozen or so assistants, Jenny has designed floral masterpieces for thousands of events from extravagant weddings to small, simple affairs. Without Jenny's expertise, Sue might be in a very different situation with a very different business. So how can Sue protect the business she's worked so hard to build? Let's take a closer look at a few ways things might unfold for Sue and Jenny. One day, while working around her house, Jenny falls off a ladder and breaks her back. Though her surgery is successful, the rehab and recovery time are longer than expected, and she is off work for up to 6 months. After that, she is able to return for only a few hours a day. So some of us, we are running the business ourselves, but we might be thinking about bringing on a key employee or partnering with somebody in the future. So also think ahead to who your Jenny could be. So while Jenny can only work a few hours a day while she's going through her rehab, Sue will have to depend on Jenny's team of talented assistants to help create beautiful floral arrangements for the next year. Unfortunately, she can't do anything about the fact that some clients will choose other florists because of Jenny's injury. If Sue had taken out key person disability insurance on Jenny, she would have been protected because she would have been able to maintain an income similar to what she experienced when Jenny was working. The bottom line, key person insurance would have allowed Sue the time she needed to let Jenny heal without losing thousands of dollars in the process. What if Jenny had died in the fall? What then? Again, Sue's business would likely be in trouble, but not if she had taken out key person life insurance on Jenny. In that case, Sue would have been protected because it can provide money to help with loss of income until that person can be replaced. Let's look at another scenario. Let's say nothing happened to Jenny. Her client list keeps growing at Forever in Bloom, and therefore Sue's business continues to grow year after year. A competitor across town runs into Jenny in a local coffee house and offers her a job worth more than what Sue currently pays her. We've already seen what happens to Sue's business if Jenny leaves. So what can Sue do to protect herself and her business? She could offer Jenny deferred compensation. Deferred compensation is an agreement that can retain key employees by paying them a predetermined amount once a milestone is achieved. The funds to pay the deferred compensation are frequently held in an insurance policy. In this situation, Sue can create a future benefit for Jenny, but only if she stays on at Forever in Bloom. The amount would need to be substantial enough to make it difficult for Jenny to switch to a competitor for a higher salary. Now let's look at a different situation. Joe and Rick are business partners who started A1 Trucking, a regional moving company about a decade ago. Since then, A1 Trucking has gone national, moving goods across the country for some of the largest corporations in America. Last week, Joe had a heart attack and died, leaving Rick with two possible new business partners, either Joe's wife or one of his kids, none of whom has ever had any part in the business. The transition after Joe's death would have been much different if Joe and Rick had set up a buy-sell agreement through their corporate attorney. A buy-sell agreement establishes a plan for the remaining partner to purchase the business at an agreed upon price from the family of the deceased partner. Frequently, these agreements are funded with life insurance. All or at least a significant part of the purchase price could come from the insurance proceeds. In this case, the value of the business would be preserved for the remaining partner. Rick's purchase after Joe's death would also provide liquidity for Joe's spouse and family. What if Joe instead had a major bypass surgery and after a change in lifestyle and months of rehab, returned to work? Disability insurance would help replace his income and protect Joe's family from experiencing financial hardship during his illness and recuperation. One final story about Jim, an extremely successful accountant who is about to retire. He has 3 sons, but only one works at the firm with him. Because of his success and his ability to invest more than his retirement plan would allow, Jim chose to invest in a life insurance retirement plan, or LIRP. A LIRP is a life insurance policy designed for retirement savings and is well suited for Jim because of his high income, which excludes him from being able to contribute to a Roth IRA. LIRPs have special tax advantages as well. Because it is actually a life insurance policy, Jim can take money out of it income tax free. And a LIRP can also provide a long-term accumulation vehicle for supplemental retirement income. Because it's a life insurance policy, when Jim dies, it will provide for his dependents as well. Now, Jim needs to figure out what he'd like to do with his accounting firm once he's finished working, which is an estate issue. First, Jim needs to make sure there are enough liquid assets to pay for final expenses, including taxes. Otherwise, his heirs could be forced to liquidate the business. Then, as I mentioned, only one of Jim's sons works with him. If Jim chooses to leave the business to his son, he may want to make some sort of equal offer to his other children. This is called estate equalization. Depending on the situation, Jim can use life insurance to make sure all three sons receive an amount that makes sense for the family. A great way to look at your business is to start with that 5-step strategy that we touched on earlier, but make it relevant to your business. So, even thinking beyond just where do I want my business to go 1 year from now, 2 years from now, 5 years from now, but how do I want to step away from the business, or what happens to the business if I'm no longer in the picture or if somebody is no longer in the picture. Ask yourself, what are my goals? Then follow that with what could stop me from achieving them? And how can I protect against that while continuing to gain every opportunity from my business? As a business owner, you have many tools at your disposal to help you achieve your goals or keep them from being derailed, Murphy's Law, including banking services, retirement plans, options, and many types of insurance policies. Before I start taking more questions, let's just review for a couple minutes. There's no one right answer to how to build, grow, and preserve a successful business. You need to find the right entrepreneurial equation based on your own needs and goals. And a good place to start was with that 5-step process, thinking in terms of the now, the soon, and the later, and starting these conversations with your professional support team. So your attorney, your CPA, and your financial advisor. As your business changes or grows, so will your needs as a business owner. Depending on the type or size of business you own, the tools available to you will stay the same, but your equation may change as your business needs change. And that strong professional team will listen to those changing needs and act on your behalf so that together they can help you stay up to date with changing laws, the pandemic, different tax credits that become available, new insurance products, new investment options, rebalancing to help your business operate efficiently today and in the future. And having that right entrepreneurial equation can help you save time, attract and retain the best of the best, and preserve what you've worked so hard to grow so you and your heirs can benefit. So I'll open up to questions. I know that we had a couple specifically, talking in terms of setting aside salaries for the year and planning ahead. So hopefully kind of breaking things down into those buckets is a good starting place as in terms of the cash flow that's coming in and the business expenses that you when I sit down with my clients, we always look at, the budget, the money going in and out, and what's left over, and knowing that we have things to spend money on at those specific points in time. So in that case, a salary is a year from now, then where do we find leftovers, or how do we have to allocate money coming in to make sure that we're saving for that bucket as well? For the life insurance, we talked a little about protection of the business specifically, but just like there's different tools and options available for those different business scenarios, there are many different insurance options, tools, strategies available for you and your family. And again, back to those goals. So that's another good conversation to sit down specifically with a financial advisor, a tax professional, an attorney regarding your estate plan to talk in terms of what do you need this insurance to do for you? What are your concerns? What are your fears? What are we trying to protect to make sure that you do actually have the right tool or product to address those specific things as they pertain to your life. As far as the balance, again, kind of back to the buckets, now, soon, later, money coming in, money going out, getting just in the habit of always saving as part of think of saving as part of those expenses too. We know there's always bills we have to pay, but incorporate savings into that plan always. So as the money's coming in, something is always going to be saved for a purpose. And what other questions? I know that's a lot of information. Hopefully you just got some keywords that you can take, write down, and dive into a little deeper with somebody. So just some conversation starters. I don't see any.
I do have a question. This is Sheila.
Yeah.
So I wanted to ask about just with all the CARES Act and the business resources that are that are available. I've been looking at I did get the PPP loan. I didn't qualify for the second round, but the EIDL loan, not the advance. I just didn't know if there's any guidance, or if this is probably if it's someone else that answers this, but if there's any guidance you can give businesses on the EIDL loans. I know the repayment is longer, and I wasn't sure. I haven't taken that, but I know it's open to me to take. So I just didn't know if you had any guidance on that for businesses.
For me, unfortunately, it's kind of back to that no simple answer. A business's payback plan is going to kind of factor into those financial goals too, and your own cash flow, money coming in, the money you'd have available to pay it out, and is going to just add another factor to balance and all those other things that you want to achieve for your business. So definitely knowing that's a question, that is a good thing for you to sit down and map out with the tax professional. Okay. And the financial professional to do kind of like a cost benefit analysis. What am I getting out of this loan? How does that fit into all the other things that I need to accomplish? Because it could make perfect sense for your business, or the risks to the payback might outweigh the benefits. But you just have to kind of sit down and map it out to know if you want to consider that for you.
Hey, Stephanie, can I interject? Hey, Sheila, just from my perspective, the loans are a 30-year loan at a very low interest rate. You don't have to pay anything back for the first year. So it's a really good opportunity for an infusion of cash into your business. And it can be a real benefit in the short term with a long-term, payback. And it's up to your given situation, but it certainly helped me. I got one last spring. When the thing first started, and it helped me with my cash flow until my business could, so I could get back out and start meeting people and get my business going again. So it is a good deal. Matter of fact, I just recommended to one of my clients that they look at it because they're having a little bit of a cash flow problem right now.
Okay. All right.
I got something I can say personally about that as well. I did get one. Unfortunately, it wasn't for Bumbles and Boots, which is what I kind of thought would happen, but it was for real estate, sorry. I actually took it, and I have been talking to my accountant, and she has said that they're trying to, if it's less than a certain amount, it's not been 100% yes or no yet, but if it was a certain amount, they're trying to vote on it in Congress to see if you don't necessarily have to pay pay those back. If it's it started out as like 50 grand or less, but I think they've lowered that. And I will tell you, I don't know if Stephanie wants me to tell you this or not, but I gave her my money, my $8,000 that I got for my PPE or it was the PPE. But anyway, I gave it to her and I was like, set this aside. I'm not going to touch it if I don't have to. And I took it on the request of my accountant because of exactly what you just said of it being a loan that you don't have to start paying back for a year that has 1% interest.
Yeah. Okay.
So I don't know if that
That's
helps.
good. Yeah, it's good input. I've just been looking at it and debating, and not that I really need it, but just thinking it's something to think about if it's,
That's pretty
available.
much, I was, the intention was not necessarily like, my accountant is really the one that talked me into doing it. She's like, Amanda, it's a loan that's got 1%. And even if you don't touch it right now, it's there if you do need it.
Yeah.
And I was like, oh, okay. So I've tried real hard not to touch it, but I would love, love, love if they tell me I didn't have to pay that $8,000 back, because I would take that and use it for other things to invest.
Yeah.
Like for my future.
And that's
Thank
a
you.
frequent conversation I have with people too, just like in this low interest rate environment with refinances and
Mhm.
home purchase decisions and how much to put down. Like debt is, we all have a goal to be debt free or operate debt free, but debt isn't necessarily a bad thing when you approach it mindfully with a strategy and with discipline. And so you just have to weigh all the factors of how does it fit into the budget? How does it fit into that business plan? What is the interest rate? How could this money be working elsewhere? And just mapping out all the factors for your specific situation.
And
Thank you.
I mean, just to follow up what she just said, like I truly called my accountant, and then Stephanie and I had a conversation. I checked all the boxes to make sure, because no one likes to be in debt, but this year's been weird, and it is what it is. And so they helped me map out a plan for, they both were like, take it. And I was like, okay. So it does go hand in hand with your accountant and your financial advisor.
Great questions. Any other questions? I know we're coming up on time, and I know, again, it's a lot of information. This is heavy stuff, but I appreciate everybody's attention and, thoughtful questions, and hope that I at least touched on some of the money questions you addressed on the front end. If you do want to follow up and dive deeper into any of those, happy to make myself available as a resource just to talk through those and other things. Is there another presentation coming up in the future, Steve, that you want to tease?
Not dedicated to this specifically. We do have some other C2Cs that we're working on to get that, as we continue to just be a resource to our businesses. So I don't have them right in front of me as to which ones we're going to be doing, but they are available on the Chamber website for that. So, but thank you, Stephanie, very much for showing up and participating and helping with this today. Thank you all for being here. As I said at the front end, this was recorded, so we will be putting this out on the Chamber social media channels and letting it live under our C2C page on our YouTube channel as well, if you want a refresher course or anything like that as well. So again, if you have questions or want more follow-up, Stephanie has her contact information at the top of the chat. As well as you can look her up on the Chamber of Commerce website, as she's a great member in good standing. So again, thank you guys very much for coming to today's C2C, and stay warm, as here it's just supposed to keep getting colder and colder as we move into the weekend. So you guys be safe and drive safe and stay warm, and we'll see you guys next time.
Thank you, everybody.